let me also welcome Siddhartha Khemka, Head of Retail Research at Motilal Oswal on the show right now. Hi Siddharth, afternoon. Good to be speaking with you. And Siddharth, firstly, earnings season is in full swing, and yes, of course, every day we get to see the reports from your house as well. Help us understand that in which sector are you guys building the most conviction at this point in time?
Yeah, good afternoon, Shashi. Glad to be on the show. If you look at, we are midway in terms of the overall earnings season, and Q1 really has been a mixed bag, both in terms of the delivery from several sectors, and also if you look at within sectors, there is a vast divergence in terms of delivery. So I think more or less, if you see, results have been in line, be it from the heavyweights banking sector, we saw good numbers from ICICI, HDFC, but weak numbers from the likes of Axis, IndusInd, Kotak. At the same time, if you look at IT, I think the large cap IT is more or less delivered in line, but the mid cap IT is a little bit disappointed, and with the high valuation, we saw the beating. One sector which clearly stands out in terms of earnings growth is cement. Across the board, we saw very strong numbers. Volume growth was there, realization improved marginally on a sequential basis, and costs were under control. That led to a sharp improvement in overall profitability. So we are anywhere between 20 to 30% earnings growth across cement sector. So I think that is one sector where we are building a positive view. Be it so our preferred picks within the cement pack is Ultratech in the large cap space, and JK Cement in the mid cap space.
Okay, so JK Cement, Ultratech Cement, these are a few spaces and particularly scripts which Siddhartha and the team is eyeing. Siddhartha, hi, good afternoon. Mansi, this side. Do you see any momentum building in the insurance space at present? Because there are a lot of data, and at the same time, we also have news flows and result-backed action coming in. What's your view on the insurance space altogether? And do you see sector-specific tailwinds emerging in this sector at present?
I think yes, if you look at the overall insurance space, what we are seeing is that again, some of the leaders in the space are delivering decent growth, both in terms of new business issued plus the VNB margins improving on back of changing in the product mix. So I think companies like HDFC Life, SBI Life, they are at the forefront in terms of earnings recovery and growth that is coming out in the current quarter as well as in the upcoming quarter. So I think clearly, yes, some of the stocks have moved up, but any fall or decline due to the market effect can be a good opportunity to accumulate stocks of the likes of HDFC Life, SBI Life, which are our preferred picks within the life insurance space. General insurance and health insurance, I think it's a mixed bag. There is definitely some pressure that we are seeing in terms of margins, some regulatory issues, plus the claim ratios being a little bit on the higher side. So that is impacting the provisions as well as the profitability. So overall, I think life insurance could continue to do better. And what we like is HDFC Life. We have a price of 900 from a 1 year perspective. And SBI Life Insurance is the other one that we like. We have a target price of 2140, again from a 1 year perspective.
All right, so that's the take coming in on the insurance counters. But all eyes will be on Tata Steel as well, which is all set to report its Q1 numbers, where revenue is expected to dip and the margins are expected to expand. Let's go across to Ashesha to get us what else is the street penciling in. Ashesha.
Well, yes, we are expecting mixed set of numbers for steel major Tata Steel this time around. Revenue is expected to see a downtick of about 10% on a sequential basis, and that is because of the 15% drop in volumes that the company has already reported for the first quarter of FY26. But remember, steel prices rose in the first quarter because of the price hikes that steel mills had undertaken in the months of April and May, and that is likely to result in an uptick in realizations in the quarter gone by. Coking coal costs were also on the lower side. EBITDA per ton is likely to inch higher. Now, as far as numbers are concerned, consolidated revenue could come in at about 50,460 odd crores, which, as I mentioned, will be a downtick of 10% QOQ. Margins, meanwhile, could come in at 13.5% versus 11.7% that the company had reported in the previous quarter. India operations, that one is expected to report strong set of numbers where realizations could rise 4% on account of surge in steel prices, and EBITDA per ton could come in at 14,500 rupees per ton, an uptick of a solid 15% on a sequential basis. Now, as far as European operations are concerned, we are expecting a surprise over there as well. Remember, it reported a loss of $37 per ton in the fourth quarter of FY25, and we are expecting European operations to break even this quarter, so that will be a big positive. Netherlands operations profitability is likely to expand on a sequential basis. Management commentary in terms of steel prices and coking coal price trend and capex plans for its India operations will be crucial. But all in all, we are expecting revenue dip on account of fall in volumes. Spreads are expected to expand for India operations, and Europe is expected to break even this time.
Okay, so a mixed expectation from Tata Steel, and as we clearly see, the realizations could see an up move of around 4% on a quarter-on-quarter basis, led by the improvements in the steel prices. Tata Steel completely flat in trade, Nagraj, at present 161, 162 before the numbers. It's cautious at present. What does the technical say?
Technically suggesting a broad range movement for the Tata Steel over the last couple of months. What we have seen at the lower level is 155, 156 is going to be the support, and at the higher level, 165, 68 is going to be the hurdle. This stock is, I'm not expecting a bigger decline from chartically as point of this time. Any slide from here on could find a strong support around 156 levels.
New India Assurance. Let's pull up that stock, and a 18% upsurge on the back of 19% upsurge as we speak, 206, 207 levels. Good set of numbers, Sharon, and that's what the stock is also reflecting at present at 206. What is your view for the ones who already have their existing positions in the New India Assurance?
So, Mansi, looking at the volume, I think this is the highest ever volumes since the stock has been listed. And again, it's up 19%, gaining market share, a very big positive, a very big thumbs up from the street. So I think if anyone has the position, please hold on to it. Looking at the volumes and the accumulation today, I think there's a long way to go. Stock has a small resistance around 210 odd levels. If it breaks that, you can easily see levels of 250 coming in the next 2 or 3 quarters. Again, very positive on the charts, trading above all its moving averages. So anyone has, hold on to it for 250 odd levels.
All right, so 250 could likely be on the cards for New India Assurance. But Siddharth, the other stock that is doing very well, and it also had its investor meet, is actually D-Mart, where the company is actually highlighting the fact that they are willing to double down on their investments with respect to new store expansions. While of course there has been some concerns within the investor community that how this new QSR can actually eat away the business for D-Mart, but the company stands tall and saying that they do not feel any threat to that. Look at the move, 6.5% jump. What does it really mean for D-Mart, Siddharth, and any specific target price on the same?
Definitely. I think if you look at D-Mart, they have been struggling in the past couple of quarters, largely on back of the slower growth. The biggest impact has been the high growth in the quick commerce business, which is impacting D-Mart's value offering that they are having. I think what the management sounded pretty confident in terms of the growth, especially in the physical stores, and that is what the market is liking for now. Overall, I think the valuations have the stock having consolidated for last 3 years. The valuations have now come off from the highs, and if we see this kind of growth that the management is talking about, if that can revive the growth, there will definitely be a lot of interest, because this is a space where there is a lot of interest. The management quality is very good. There has been issues recently after the management change in the CEO. So I think a lot of things now putting back into perspective. We definitely like the stock, but I think a lot needs to be delivered than just talked about. So right now we have a buy rating with a target price of 4,500. Not much upside, but definitely we'll review our numbers post taking what the management has said into consideration, and we'll review our numbers for sure.
So that's the view coming on Avenue Supermart, and let's meet takeaways as you see on your screen, and a view coming in as well. A quick view, Sharon, in the chemical fertilizer space as well. The chemical stocks are not doing that great today, but yesterday was the day for the chemical space. But the fertilizer stocks, be it FACT, Chambal fertilizer, all of it is doing good rounds. Any view? We just have 3 minutes for the markets to close.
So Mansi, I think in the morning they were doing quite well, but since morning they have seen somewhat of selling. But if you see the charts of Deepak Fertilizer, the stock is almost near to its all-time high. Looking good on the charts. If anyone has a position, I would suggest to stick to it. And I think its high is around 1770 odd levels. And looking at the chart, I think if the stock reverses, it can easily test its recent swing high. So Deepak Fertilizer is one stock that should be on your radar for the next 3-4 trading sessions.
All right, so within the fertilizer pack, let's watch out for that. But with this, Sharan as well as Siddharth, thank you so much for taking the time out and speaking with us.